Welcome back to Stock Tricks with Nick for this week's Breakout Watch List from November 30th to December 4th. If you're new to the channel, we do these Breakout Watch Lists on Sundays morning to get you ready for the rest of the week. We do a live stream either on Tuesday or Wednesday, depending on how the market's shaking out, to renew this watch list and see what other stocks I should add. And then on Friday, I do a trading recap of all the stocks that I personally traded. I show my winners, but I also show my losers. I think that's really important for traders to be transparent and show what's not working for them, because you're not going to improve if you're only looking at your winning trades. On that Friday recap, I also recap how the market did overall and how our two watch lists did. So if stock trading is your thing, please follow me on StockTwits, TikTok, Twitter, all the handles there, and then subscribe to this YouTube channel, Stock Tricks with Nick. If you enjoy this video, please leave a like, and that really helps me out. So what stocks make this breakout watch list? So all the stocks that we'll be talking about today have breakout potential in this upcoming week. They're all above their 200-day simple moving average, which is in an uptrend. So you have a couple durations of traders all buying in. It's in a strong uptrend. There's little overhead volume, so it's not pulled down over 50% from a previous high point. And then it's also 150% off their 52-week lows. So I find that these three filters help to get the stocks that still have breakout potential. So this is our list for today. We got 20 stocks for you, 3 of which I'm already in. You can see the 3 stars with ALGN, AMD, and OMI. I currently have positions in those, but they haven't cleanly broken out of their bases just yet. So I still think there's some value in checking those out. All right, let's jump to the charts. So first, let's go to AHCO. Quick rundown of what's on our chart. We got the Bollinger Bands, which is 2 standard deviations away from the 20-day simple moving average, this green line. Got the 50-day simple moving average in red, 200-day simple moving average in yellow. We have price relativity. Let me pull this down a little bit. Price relativity compared to the QQQs, and then average true range to see if things are tightening up, getting ready for a breakout. We do have volume under here, and then the volume profile to the right side, and this is just the volume coming in at each price range. So that shows us if a stock has a lot of overhead that would take it off our watch list. So first we have AHCO. Zooming out here, you could see this has been in a really strong uptrend this year. What is it up year to date? Around 200% year to date. That's not exact. We're just keeping this quick. But recently, we had an undercut of the 50-day simple moving average in late September, and then it has since run all the way up to 65% move, so a little short of that height type flag action, but still quality breakout through here. And since then, things have gone really quiet. You could see the average true range getting tighter and tighter. We're at the all-time highs, so no overhead through there. And my trade idea is kind of drawing the line through there. Basically, if we could break over Friday's high point, maybe by a little bit more, say around 30, 35, that would be a possible buy point. And then by doing that, you have the 8-day exponential moving average, the 20-day simple moving average, both at the same price along with the previous day's low. So just under that point would be your stop loss. So you can get decent size on this trade, because that would, using that as your stop loss, would only be around a 4% risk, which is nice. So that's AHCO. Next, we go to ALGN, and this is a stock that I do currently have, bought on the break over this pivot point right here. And you see it did break out on higher volume, which is what you want to see. Had a day higher high, higher low, the follow through day that closed just slightly below, basically flat on the day. And then 2 days was Wednesday and then Friday. Remember, this is coming off of Thanksgiving. Volume lightening up. This is right at the 8-day, right at the 20-day. And this is a possible gap and go trade. It's above this volume profile, so you have some support with that. you have the 8-day and the 20-day as support. A possible buy point would be breaking over November 24th high of 486, and then putting that as your buy point using some previous lows, or using, excuse me, the 20-day simple moving average as your stop loss. Below that is only a 5% risk. So nice risk for a possible break to new highs there. Next we have AMD. This is one that we've talked about in a couple previous breakout watch lists, and something that I currently have. Bought on this break over this guy's high. So that was the 84.81 high that I bought. Again, you see high volume on the break over that pivot, and then we get some sideways action, a head fake higher that squatted, and then what I really like here is an undercut of the 2 previous days lows here. So this will typically get some really, really tight stops out of the way and set the trade up for a nice breakout. So what I'm looking for here, if you're not already in the stock, you could use the high from October 8th as your buy point. That would be 88.72. And then using that as your buy, 2 previous days lows is only 3.8%. The 8-day exponential moving average, that would be around 4.5% risk on that trade. Zooming out here to really show the pattern. This is a classic VCP setup where volatility contraction pattern, you get from high to low here, 22% pull down. From high to low here, 17%. Third pullback from high to low, 10%. Then you get this last one through here, 2.5%. So each of these pullbacks are getting tighter and tighter. To make it a perfect setup, you would want volume really getting lighter through here, which I guess it is, but could be a factor of the shortened holiday week that we had previously. So what I do like, big volume bars on the green days, and the red days are all quiet. So this is broken out, let's see, 64% really quick breakout the last time it had that volatility contraction pattern. So really looking at AMD. I already have a position on this guy, but is creating a good buy point with the high of October 8th, and that's that 88.72 range. All right, let's go AXTI next. So with AXTI, you have a possible just short, no, we can use this guy. Possible high tight flag through here, so up 92% since this guy's low in October 28th. Since that point, we pulled down only 9.5%. So 9.5% from the top here. Ideally, what you would like to see with this trade is have Friday's high kind of mark your pivot point, and have Monday, Tuesday kind of pull back. This gives the 8-day exponential moving average time to flatten out, the 20-day simple moving average to move up here, and more traders that were in from the base all the way through here to get stopped out if we undercut some of these previous lows. But if it keeps running, you could use the high point as a buy. But ideally, like I said, we pull back, and then we can use Friday's high point as a buy. That would be 10.05 because the high here was 10.04, so you're buying on a break over that. You really like how volume is getting quiet after it extended through here, so not a lot of people are trying to get out. Would also like to see some sideways action to get the ATR down a little bit, but really strong relative strength. We're over any of the overhead resistance, so another possible breakout there, but might need to give it a couple days. Next we have CDAY. This we got 200-day and a strong uptrend. We had a kind of check back moment just above the 50-day simple moving average that worked through earnings, popped through there, and now we have kind of a double top here as a possible buy area. You like to see Friday's action. Ideally, you would have gotten in kind of with a break on Friday's move, because you have 2 or 3 high points right here. Let's see, 97.58, 97.40, 97.20. So a break right through that area would have been a really nice buy point on this guy. But still setting up for the breakout from the all-time high. but you like to see that volume on the move. That gives it a little bit more strength. You can see ATR just starting to pick up after it had declined. Things have gotten quiet through that point. So um, again, ideally, this pulls back and then goes, so it resets everything, but it might just go right through that buy point. So break over Friday's high of 118 would be your buy point. All right, let's go next to COHU. Let's see this guy. So up 70-ish% in just about a month. From this point, you can see volume getting really quiet as we pull back. And Friday, we broke over the diagonal resistance. We had an undercut of the previous lows, which you really like to see, get all those stops out of the way. Full candle here, green candle, closing at the high of the day on really light volume. Maybe that's a function of it just being the shortened trading day on Friday, but what I'm looking for is a break over the high point from November 24th. That would be 28.15 as a possible buy point there. That is COHU. Let's go CYH. Possibly my favorite setup of what we're working with here. 154% move in short order. Maybe this is 2 weeks or so. From there, we pulled down 30%, and it looked like this was going to be the low, and then we undercut those, which is nice. Again, you like to see those undercut of previous lows. Rallied a bit to make possible buy point there. That's a 20% move higher, 21% move higher since then, and we got a big volume day on that move kind of breakout there. Unfortunately, that's squatted, and the last 3 days have been on really light volume. So not many traders are getting out on this pullback. Now we're right at the 20-day simple moving average, have the 8-day, and this volume shelf right here. So what I am looking to do is take the stock if we break over this volume shelf, so around 880. That would clear the highs of the previous 2 days. If you want to be really like extra cautious with this, you could use the high from November 23rd of 941 as a buy point, but kind of drawing a diagonal out there. With a move on Monday, we would see a break over this diagonal resistance right with the break over the volume shelf here. So to get a little bit aggressive with the entry allows us to get aggressive with the stop. So keep risk really tight on that. We'd have 5% risk on a really powerful name. So this is CYH, and this had a short float percent of 7.3. So could be a short squeeze when it does get going as well. Let's go DAR, Darling Ingredients. This is one that I have traded in the past. Has worked really well. We had a pullback to the 50-day simple moving average around September 23rd, moved up 60% through there. Since then, you can see ATR is in a downward trend, so things are getting quiet. Let me pull that back. We had a big buying volume day through here. So a lot of people entering the stock on that day. Had an undercut of that low on, that would have been Wednesday. With the holiday, it's kind of hard to get that. And then on Friday, we had higher highs, higher lows, closed right at the high of the day, sitting on that 8-day exponential moving average really well. We're over basically all of the overhead resistance. So you could, I would probably look at just a buy at all-time highs. That would be 49.85. You could get a little bit aggressive and just say, if we open in the green, get a trade on there. Let's see, is this guy's high? 48.98, 49.04. Yeah, so Friday's high was higher than the high volume day that we got. So Keep a watch on this. We have the 20-day simple moving average coming up and a couple lower wicks that knocked out those stops, which you always like to see. Next, we have DNLI. This is one that Minervini was trading all throughout here, and then it really extended on him. Now we're taking a look, kind of downward wedge through there. You can see Friday's move moved over this downward diagonal, but still sitting under the 8-day exponential moving average. Volume on this pullback's really quiet while it got heavy on the extension. That's always a good sign. Less traders are getting out of this name. Let's see, what are we from the highs? So we pulled back 19% from the high point after a really quick 70% move in 2 weeks. So good pullback. Now we're right at the 20-day. We have the 8-day to break over. You can get aggressive with a break over Friday's high, 61.88 as a buy point. I'm looking at the high from November 23rd. That would be 64.17 as my buy point. That's DNLI. You can see as we're pulling back, ATR is tightening up, volume getting really quiet. Has everything that you want for a pullback buy. Let's go DSKE. We've talked about this one on some prior watch lists, but zooming out here, you can see really strong move, 340% since May. Couple pullbacks. This first pullback here was 30%, and then we had an undercut pullback, so get out all those stops from here out of the way. Since then, so this first pullback or the second pullback here was 34%. Then we had basically on that candle, high to low, 18%. And now this is really tightening up. You can see ATR getting really tight. Big buying volume on the November 24th date. And that's always good to see over all of the selling volume days. Trading really sideways. And then what I'm looking for is a break over these two guys' highs. So that's 725, 725, break over 725 is my buy point. We're over all of the wreckage, all of the volume through there. Really strong move. All the really strong buying volume on these breakout days, while the pullback came on lighter volume. So not sure what was going on with that, but it has held really well since that breakout. So that's DSKE. Let's go FOSL. So we have a 108% move in 2-ish weeks after earnings. Volume is getting really, really quiet as it's tightening up through here. This is one that might need a couple of days to set up for a pivot buy point. If we can make a new high and then pull back, set a lower one. But if this just keeps going, you would use the all-time high. So that's 1220, 1218. So 1220 would be the buy point right through there. If this doesn't like pull back and then set a buy point lower, maybe it does that, but we're buying when the stock's showing great strength, breaking through previous highs. You'd like to see ATR get a little bit more quiet. Right now that's kind of high and trading sideways. These bars are wide. Maybe a couple of days of sideways trading before this goes, but keep this one on your watch list because 108% move in 2 weeks. Things are getting quiet. It could just take off again. Let's see. And this is 18% short float, so short squeeze possibility. Let's go IIPR, another one that we've talked about in last week's stream. Had this breakout, which turned into a head fake. Got pulled back on that day. Had 2 days of undercutting previous lows, getting me out of the trade, unfortunately. But this is still setting up for a really nice entry point. You can see diagonal resistance there. Buying volume heavy on the green days. ATR is getting really tight. This moved up, let's see, 47% in 3 days through earnings, 4 days through earnings. Has since pulled back. That 8-day exponential moving average is holding really well. So a break over Friday's high, that would be 158 as a buy point. And then using the previous day's low, you could do really, really tight 2.8%, or under some previous lows as a stop, 6%. Maybe you split your stop, get half at 3%, half at 6%. Then you're at 4.5% for your overall position. That's a really tight stop. But it allows you to put more size on the trade, because if it works immediately, then your risk reward is great on the trade, and if it doesn't, it scales you out pretty quickly, and keeps your losses minimal. All right, let's go. That was IIPR. Let's go JD.com here. This one has been trading really wild with the election Chinese name through, and in those names that we're doing really well. Got some vaccine news that pulled it down, shot right back up. So you like to see a break right back higher, but those are really tough to trade. I don't like to trade those V-shape breakouts. So thankfully, pulled back again to the 20-day simple moving average, moved higher, pulled back, moved higher. So now we have a really clean buy point. This would be 90.29, 90.30, using the high of November 24th as your buy point right through there. You could also draw a diagonal. You could see that's getting 3 of those highs. So maybe a break over Friday's high would be, it's so close, it's not worth getting that aggressive, I think. So putting your buy point there, using it, a pullback to the 20-day simple moving average, that's 4.5% risk. That's quality risk reward, especially since, let's see, what did this move up? Yeah, this has been in a strong uptrend this entire way. So JD's been a name to keep an eye on. Next, we have MRTX. So you can see, again, all the stocks that I trade, really strong uptrends that have spent some time trading sideways, pulling back, setting up bases, and then are set to go again. On this, I wanted to call out high volume green day through here, try to get out, and then squatted. Volume profiles getting really quiet through the pullback through here. And then if you just draw a diagonal off some of the high points, we did break that on Friday. You have the 8-day and the 20-day right at the same price, providing support. Got really tight action through here. The ATR is getting smaller and smaller. That's what you like to see. This is bunching up. So what I would do is a break over November 18th's high. That would be 235, call it. A break over 235 would be a possible buy point. And then pulling back to some previous lows, that's 6%. Again, you could split it, maybe put half at the 8-day exponential moving average, half at the 20, half at the 8 and 20-day moving averages, and then half at previous lows. That gets you a tighter stop. But really nice name, has been running really strong this entire year, and has given us a possible buy opportunity there. That's MRTX. Now we get to the third name that I'm already in. This is OMI. I bought with a break over this guy's high since then. They got this right here. So kind of pulling back, we have 2 gap and goes in this chart. So since mid-July, ran up 250%. Since this high, we have pulled back to the 50-day simple moving average. That's a 22% pullback from this high to this low. And then since then, it's been really riding the 50-day simple moving average higher. Now you have the 20-day, the 8-day, all of that right there. You do have a volume shelf of, right now it's support slash resistance as it makes its way through this, building out this volume shelf. Friday, we had a really quick undercut of some previous lows and touch again off the 50-day simple moving average. Thankfully, did not get stopped out of that. But you love to see those lower wicks right before a buy entry. You could use, that would have been Wednesday's high. So Wednesday's high point of 25.73 as a possible buy. With that, you could use Friday's low, the 50-day simple moving. That's a little bit loose. You might just have to use a 5% stop on this if you're buying over there. But That is OMI. Next we have REZI, another possible high type flag through here. So ran 104% in just a couple of days. Since then we had a pullback, 22% pullback through here. Again, V-shaped recovery, but thankfully we now got another pullback to the 8-day, resetting up the trade. So now you have almost three days highs. Let's see. So 1995, 1982, 1985. So break over 1995, break over 20. That would be the buy point. You see tons of volume coming in as it's recovering. Got really quiet in the pullback. Tons of people coming in. That's a great sign. 2-day pullback is much less volume than what you see here off that 20% move, and possible break of previous highs, $20. Really get this going. That's REZI. SRRK is next. Was a little bit hesitant to put this on the watch list, but I think it's worth keeping an eye on. This one moved up 240, 250%, just in a couple days, 3 days. Since then, trade sideways. Kept an eye on this, but then we had a breakdown instead of a breakout. But I like this breakdown because it gets out all those previous stops. It was lower than the previous lows here, so you love to see that. You could have gotten aggressive with that pullback by buying once we broke over the high 40.63. That probably would have been the move on this trade, because now from the lows we're up, what is this, 26%, 27%, and it's been consecutive, so hasn't given us another pullback. Ideally, you could buy off the all-time highs here, so that's 48.11, but ideally we get another pullback to the 8 to the 20-day, kind of reset, get some of the short-term traders that already have 20% profit out of the way, and get some new blood in there for a break through there. So I would be a little bit hesitant taking this trade with a break of all-time highs. I'm kind of throwing this on my watch list for the back half of this week if we do reset and then press from there. But like the undercut, like the power in this breakout, sideways action, volume super light. So one to keep an eye on. Got 3 more for you. And if you guys are enjoying yourself, please leave a like and share this with anyone who you think would benefit from a breakout watch list. So we got SSTK, Shutterstock, really solid move. Let's see, 115% since July. I traded this guy through this kind of VCP setup with a break on this candle, high volume break over some previous highs. That was really nice action. Unfortunately, I took the trade off as a lot of my portfolio was getting hit. That was a dumb move. Should have kept it on, because had a 16% profit going into earnings, that would have been fine to hold through, and then we did get that gap up on earnings. Since the gap up on earnings, we've pulled back to the 8-day, undercut that, had kind of that V-shaped recovery, but since then pulled back, and on Wednesday, another lower low. This undercuts all of the lows except for the candle on 11:10. Friday, really low volume, push back over the 8-day and the 20-day. Not going to get aggressive with a break over either of Wednesday or Friday's high. I'm going to wait for a break over 11:23's high. That would be 69.96. Call it 70. Round number break gives it a little bit extra oomph as well. And at that point, we're right over that volume shelf here. So not a lot of resistance higher. You can see ATR really getting tight. Ideally, this volume kind of flips around. We've seen some relatively heavier selling days than buying days. Got this large buying day here, but you can see volume getting really quiet through this pullback. That's exactly what you like to see. But you'd like the green days to be a little bit heavier than the red days. So let's see if we can get a break back over this guy after a quick pullback to undercut those previous lows. Next, we have TGTX. You'd see, where's the gap? There it is. So kind of a gap and then just went with it through here. What was that move? 155% since late April, early May. Since the highs here, we had a pullback, 22%. Breakout right into earnings. That undercut some previous lows, which is nice. 50-day simple moving average, 20-day right there. 200 days in an uptrend. One thing to note, the two biggest volume days were Friday and then on November 18th. Both of those were failed breakouts, but you still like to see the volume coming in. That means when it did pull back, not a lot of people were getting stopped out, not a lot of people were selling. If you're going to take this trade, because of this failed breakout, putting some size on there, that would be putting your trade at the previous high. If it happens on Monday, is going to be an 8% stop loss to the previous day's low. That's a little too high. So for me, if I'm going to take this trade, I would look for just a break over Wednesday and Tuesday's high. So 30.55 area, because we have some previous highs that we could draw the diagonal down. But getting in there keeps your stop loss super tight, 4%, 4.5% through there, below previous lows and the 8-day exponential moving average. So let's see if this can get going. TGTX. And finally, VOXX. This is one that we put on last week and on Tuesday's watch list. Really clean breakout, gave a buy point from 11.19's high. So on, what day was this? Tuesday? Friday, Wednesday, Tuesday, Monday. On Monday, really strong breakout. You could have done a buy there, a buy over this false breakout's high, but you see the volume coming in, really strong breakout. That was 18% move on the day. Since then, now we can kind of pivot to a pullback buy point, because look at this volume on the pullback, super, super light. Ideally, we have one more day where we undercut the 8-day exponential moving average, get those final stops out. But on this type of trade, you're looking for a buy over the previous day's high. So right now, that's 13.18 as the buy point. Look at all the volume coming in on green days versus red days. Great setup. And zooming out, you can see this has been super strong all year. Now we're kind of getting maybe a cup and a handle to break out further. So that is the watch list for this week. If you enjoyed, please leave a like. Comment below on any stocks that I need to add to my watch list that we didn't cover today. It's still early in the morning Sunday, so could do some research, come into the market on Monday with a plan. I know I have my alert set for these guys, but would love some more stocks to take a look at. So if you enjoyed yourself, please subscribe. Let's see. Follow me on StockTwits, Twitter, TikTok, Stock Tricks with Nick, and subscribe. Take care.